Okay, so let's have a look at the fourth and final adjustment that you need to do for Part A for 2021 Fauci PLC, and that's looking at your interest cover. So your interest cover is your net profit before interest and tax. Divide that by your interest for the year, and this means the firm has money available for expansion, paying dividends and paying interest and loans. So it's looking at how many times you can cover the interest cover within the business itself. So your formula, net profit before interest and tax. So if we look at our account and we look at the profit and loss part of it, you would see that your net profit is 39,000. We've paid interest already of 20,000. There's no tax on it, so we need to add this 20,000 back on. So it's going to be your net profit before interest and tax divided by your interest. So it's 39,000 plus 20,000, which is your interest, divided by your 20,000. So 59,000. So it's going to be your net profit. So your net profit is kind of the money that you're going to use to pay your interest from. Interest is going to be 20,000, so we would have paid back interest already. So 59,000 was available to us to pay back our interest, and we're going to divide the 59,000 by our interest, and that's going to tell you how many times we can cover it. So 2.95 times is how many times we can cover interest cover within the business itself. So if profits go down, we can still pay our interest 2.95 times. So that's why you're taking your net profit, we're adding back on our interest and tax, so that would have been paid anyway, and then we'll just find the proportion of our interest that's paid, how many times that can be covered from the profit that we have. So it's 59,000 divided by 20,000 gives you 2.95 times, and that's the interest cover then for the business.